I wouldn't say they're, I mean, they're just impressive, right? Some of the things that we have are, some of them are just so unique. I can't even say what they are because you'll know what it is because they are public. They're publicly known, and there's only one of them.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, my guest is Rich Vinhais. Rich is the CEO of Wax. Wax is a new insurance company. It is an insurance startup, a tech startup, and it helps people insure their most valued possessions. Rich, welcome to the show.
Thanks for having me, Gabe. Appreciate it.
Rich, I've never met anyone who said they dream of becoming their own CEO of an insurance startup. I mean, this must have been a crazy journey for you. I think it all started with you starting watch collecting. How did you get into the collectible space?
So I've been a long time watch collector, and this goes back to my early childhood, but especially in high school, a bit of my formative years. And collecting watches was always a bit of a way to set yourself apart from others. At least that's the way I kind of saw it. And, your wardrobe could only take you so far. And I always found the mechanical marvels that are watches were just kind of a creative, interesting way to set yourself apart. Plus, they're just fantastic to look at it. So it's like I'm kind of drawn to the aesthetics of watches, the design, and just the heritage behind a lot of these brands. I've always found that to be rather fascinating.
And Rich, how old were you when you got your first watch?
Well, if we're going way back, I must have been like 7 or 8 years old. But in high school, I'd say my freshman year of high school was probably when I started actually collecting. Right,
Yeah,
like there was a colleague of mine. Going back in high school, a classmate of mine had a series of watches that he'd bring in that have probably some questionable origins in terms of where he got them. But it was enough to intrigue me to a point where I'm like, yeah, these are fantastic. I'll give these a shot. And I feel like the bug has only gotten worse as as the years have gone on through education and just social media. I think that's kind of poured fuel on the fire.
For sure. And I mean, how did it grow? And I guess one of the questions I would have is most people in their teens or even their 20s, most people are just struggling to pay their bills, or, they make money, they buy it on cars or partying with friends. How did you get the money to start buying collectible watches? Because, and maybe we can talk about how much it costs to like get into the space and buy good pieces. But to me, as an outsider, I don't collect watches, but it sounds like it's an expensive hobby.
It certainly can be. And I will say this, in those earlier years, these were not expensive watches. And they, I think the misconception about watches is that it's not so much a misconception. There's some truth to it, but that it is the solution to a problem that has been solved many years ago. Right? You have the time in your phone that's always with you. You don't need these things. These are not essential items to have in your everyday life for you to kind of get along and function. I think in those years, it was more, I just thought they were cool. You had this nice little aesthetical thing on your wrist. It's on par with jewelry, and there's only so much a man could accessorize with. And the fact that you could do so with a watch, these were not very expensive watches back then, right? I think what ends up happening is over time, as your education and knowledge of the space expands, you start understanding which pieces carry higher price tags and why, and tend to carry greater value over time, right? So back then it was more, watches that were quartz movements that require batteries. These are very low value pieces for, $50, $100. And then as time goes on, you start realizing that there is such a thing called automatic watches, where there's greater engineering that's gone into creating the movements that do not require any batteries. It's all powered by the movement of your wrist. And therein lies some of the intricate engineering that goes into it. And it's fairly rudimentary, but what has happened over the years is that the level of sophistication and the innovation that's gone into designing, creating these watches have just reached all times levels of quality, of engineering. And then you pepper on the notion of high value brands, then all of a sudden you have a recipe for disaster if you're you're a collector in this space. But I'd say, if you're in this space, you could spend a few $100 for a fantastic watch, or several $100,000 for a watch, and everything in between, and certainly way above and below as well.
It's funny, you were talking about different ways man can accessorize, and I just thought of a story. I remember Kevin O'Leary was talking about this. Kevin O'Leary, Mr. Wonderful, he's famous from Shark Tank, and he's also an avid watch collector. And he was wearing one of those watches that you really can't, it's very difficult for to tell the time when you look at it. It was really out there, kind of artistic. It had 2 or 3 different dials on it with the sun and the moon kind of rotating, whatever. And somebody asked him, they said, Kevin, how do you tell the time when you look at that watch? And he said, oh, I don't use it for that. I wear it because it's an art piece. If I want to know the time, I look at my cell phone.
That's true. There's some truth to that.
But yeah, so tell me, Rich, I guess in terms of watch brands, when you come across a new watch, hey, should I buy it? Should I not buy it? What are maybe the top 3 or top 5 watch brands that you think make for good collector pieces?
So here's what I would say about that, Gabe. I'm probably not the guy to ask, mainly because I do not buy watches the way many people do. And here's what I mean by that. So if you go back in time, let's just say pre-pandemic, right? Pre-pandemic, and in early 2014 is probably when I really started getting heavy into buying higher end watches, automatic watches. I'm talking Rolexes, Audemars Piguet, and the like. Back then, these items were kind of almost seen or treated as if they were like cars, right? And what I mean by that is you buy a car, you take it off the lot, the value goes down. So you're buying it for no other reason than the joy and the appreciation for the thing. Right. So, watches that I bought back then, there's always the concept of buying a watch at retail, above retail, below retail. Back then, getting access to a watch below retail was pretty easy. Right. In fact, getting access to even higher end brands today, back then, it was one of those things where they were just trying to clear inventory. What has happened since then is that I think the pandemic in particular, but definitely social media, has kind of demonstrated just the beauty and the joy of collecting, and the types of people that are collecting. And what has happened, it's kind of infused a lot more capital interest in the space. And as a result, it's kind of propped up prices along the way, right? So now all of a sudden, people that have bought watches at retail, and you build up relationships with these authorized dealers, and over time, you get access to watches before the general public does, because you've built up a buying history with that authorized dealer, right? But now it's reached such it actually reached a fevered pitch maybe about a year or so ago. A lot of this came on the heels of everything that you're kind of seeing unfold in the financial markets today, right? So you had a pandemic that people had a lot of disposable income that they were sitting on. Suddenly, the topic of collectibles started becoming mainstream again because people weren't traveling. They started rooting around their closets and realizing they had these amazing trading cards, and the prices of these collectibles started skyrocketing really during the pandemic. And watches were no different, because people were still buying and selling and trading during that time. So during that stretch, collectibles in general just started spiking, right? And this is around the time that Wax as a company was starting to form, because there was just a lot more capital being infused into this market. So for me as a collector, if I just put that collector hat on, I've always purchased with the intent of it tying to an accomplishment, a memory, a milestone, something that would tag significance to this inanimate object, right? Now, as the years have gone on, you can't help but get involved in the dollars and cents because you can't avoid them anymore. If you're going to be spending 10, 20, 30, $40,000 on a watch, you want to make sure that it's at least retaining its value and hopefully appreciating over time. And that is what's happened during these the past 5 years, let's just call it in particular. There's been this incredible boom in the value of watches and interest in the market, and then the secondary market where the notion of watch flippers that are coming in with the intent of buying, selling, and trading. And that has just infused this massive spike in prices across the board. So pieces that I was able to get at a discount or maybe slight discount in the past, not only is that no longer achievable, it is highly unrealistic, and chances are you're going to be paying 2 or 3x of that in the secondary market because there's so much money that's being made. It's not that dissimilar from the sneaker flipping culture or art collecting. It's all connected. Collectibles that kind of follow that path of an alternative asset. But if I were to be one to offer some counsel and guidance, always buy what you love. Never just kind of fall into the hype train. That is a dangerous game to play. But if you're trying to purchase with a modicum of investment sense, going after some of the more heritage brands out there, you generally can't go wrong. So I'm talking Patek Philippe, Vacheron, Audemars Piguet. I think what's happened in recent years has been a massive resurgence in independent watches. Now, independents are just brands like MB&F and Urwerk, where they're a little bit more, the designs are a little bit more off the beaten path, slightly more avant-garde, but the price points are so insanely high because the production volumes are so low. So that's just kind of created this fevered pitch of people with disposable income. They're like, I want that watch because it's so difficult to get. It just makes me want to get it that much more. And that's what's just kind of fueled this industry in recent years.
Yeah, and I'm definitely hearing a lot more about just watches in general, right? People collecting watches, people having YouTube channels where they just talk watches and showcase watches, et cetera. It's definitely becoming much more mainstream than it was, say, 10 years ago. For sure.
Oh, yeah. Yeah. Like like even a few years ago, there were no YouTube channels for watch content. And now there's dozens of them out there. It's become more commonplace because there really is a community of rabid followers there, for sure.
So Rich, when people get their watches, they start building their collection, they have 2, 3, and like you said, some of these watches can be quite expensive. And next thing you know, you have quite a valuable collection of watches. This is where Wax comes in because, as I understand it, Wax helps people insure these assets. Maybe tell us a little bit more about the Wax business model and how Wax is different from a traditional insurance company.
For sure. And Gabe, what I'll do is I'll probably take a step back to explain how I got into Wax.
Yeah,
as well.
For sure.
Before jumping directly into the Wax story, I'll tell you a little bit of how I got into that. So I come from a management consulting background. I worked at this Big Four consulting firm called EY for the better part of 15 years. And I led a practice that was geared towards technology transformation, right? And it was focused on the financial services market, primarily Fortune 500 companies, where you basically go into companies and help them deal with their problems, right? So that's what a consultant does. During that time, my interest in collecting grew, and as did my aspirations of always getting involved in some sort of entrepreneurial path. Now, the beauty of my consulting career is that it always felt like a business within a business. This was a very large firm, but I ran my own practice. So there was a very heavy entrepreneurial side of that. But, you can't help but always keep your eyes open to the world and opportunities that are around you. And during that stretch of time, I was approached by a friend of mine who was an avid collector. We'd always see each other in the same circles. And he was asking me to invest in a project that he was working on. And it was a collectibles oriented project where he was looking for cash infusion to invest, of all things, in ticket stubs. And ticket stubs, and I mean that exactly what it sounds like, going to a basketball game in the 90s to watch the Bulls play, you get that physical ticket stub, something that is not done today. Everything's digital. You don't get those paper things. And what has ended up happening is that those games of significance where there were real milestones that happened, like Michael Jordan's flu game, or a significant hat trick by a world-class player, or Diego Maradona, the hand of God in the World Cup back in the day, the tickets from those games where those milestones have happened have suddenly skyrocketed in value, right? And this gentleman was kind of at the cusp of seeing that trend, and he asked me to invest, and I said no, right? And shortly after that, there is a punchline to this. A colleague of mine that had asked me to invest in something some years prior, he was giving me a bit of an update on how that investment was going. And he made basically $1 million on this investment that he had asked me to invest in, that I basically punted on. And I was filled with such regret, Gabe, that I'm like, you have to understand, my background is such that my parents are immigrants, right? They both come from Portugal. I'm a first generation American. My upbringing has always been one of conservatism, pragmatic financial decisions, pinch your pennies, placing bets or taking risk. That was just never my thing. And this was a bit of a switch that was flipped off in my head. I was like, I've been grinding so long in this consulting career for so long and kind of pinching my pennies. I need to start taking some chances. And this is what led to ultimately making me decide to join Wax. But I went back to my friend who then, I'm like, look, not only am I going to cut you a check for this silly ticket stub thing, I want to be involved in helping you grow this thing. And that little project, started off with a few people investing, where we raised maybe $25,000, $50,000, then grew to about $500,000 of people that were throwing in money. And we were basically buying ticket stubs and kind of collecting these assets and waiting for the appropriate time to resell them. Okay. That entire experience led me to get to know this individual who I've only known as a watch friend. Like, that's the only way I've known him. I had no idea that he was some big shot venture capitalist that was also had several hundred companies within his portfolio. Right.
Wild. That's wild.
None of that kind of crossed my mind. I just saw him as a savvy businessman that also was into watches. I'm like, I like his style. And that evolved a bit to the point where he's like, hey, I'd like you to lead one of my companies if you're cool with that. And I basically turned him down several times before eventually obviously saying yes, right? And that was Wax. And he was one of the early founders of Wax. And I came in around that time with a full knowledge and understanding of the collectible space, because that was my world. That was the thing that I was part of, the thing that I was passionate about. And there was a heavy emphasis early on the watch side. Now, the underlying business case for the company really stemmed from a gap, or a perceived gap, in the insurance market when it comes to collectibles, for the obvious reason that because collectibles have spiked so much in value in recent years, incumbent insurance carriers have a hard time understanding that, right? So try to tell a storied insurance company that's been in business for 100 years that $10,000 watch that I bought today, the next day, it's worth $25,000. Having that conversation with them would rarely go in the way you would think it would go for a collector. So that was kind of our foray into the market. We were like, we want to address this gap for collectors with the knowledge that we understand the collectible space and that there is severe market fluctuations that happen. So just because you buy something at retail value one day, there is a secondary market value for that same item, and it could be the next day. So we were able to come in and develop a business case and a business model where we insure at the correct market value, create the right user experience, but also be ingrained in the community itself, where it's like, hey, we're Wax. We focus on insurance for the collectible space. So not only are you covered correctly, you're also being covered entirely. Because another gap in the marketplace was that of homeowners insurance, right? So a lot of people would just be like, well, I'm just going to get a rider on my homeowners and add my watch. But what would end up happening, Gabe, is that there are some significant gaps in coverage when you go down that path for your collectibles, because collectibles are always an afterthought. But what has happened in recent years is that they are now legitimate asset classes that need to be treated and protected as such, right? And that's where our emphasis and our focus has been. And, we've been at it for a few years at this point. I'm happy to say we've been growing steadily since our inception. We have a fantastic carrier partner in that of Chubb. Chubb focuses on the high net worth space. We have our relationship with them, so they kind of handle, in the event of losses and claims and things of that nature. They have the cash to handle that. We cover the user experience and onboarding the individuals. We also have a collection management app within our system where individuals come in and they use the app for free to kind of catalog their collection. And it's just a great way to organize your things, right? And you could kind of catalog your collection, how it's going up and going down. And then if you need to get it insured, it's just a couple clicks, and within a minute you could have your item protected. So that's kind of how the origin story of Wax began. And since then, our mission has evolved a bit. Like insurance is most certainly where we're most mature, and that's where our sweet spot is. But we really want to be at the center of a collector's universe and address all things that come up for a collector in their journey, right? So not only can we help you organize your stuff, we could help you protect it through insurance, but we've also launched subsequent products that focus on lending, right? So if you're looking to unlock liquidity for your watch or your collectible, it's kind of like an elevated version of going to a pawnbroker, but being done by people that actually understand what you have, right?
Wait, Rich, let me get this right. So you can take out a loan against your watch.
Yeah, that's the idea.
Wild. Wow, that's cool.
And the other bit, so the last bit that we have is a vaulting product itself, like a physical vaulting product, and this is a product that we just launched a pilot for over the past couple of weeks. We have a physical vaulting location located in Delaware, and this just leads to a bunch of opportunities that our clients have been asking for, right? Like, very often our customers are dealing with challenges of space, especially for metropolitan areas like New York, where they have hundreds of watches that come with boxes, and they want a place to kind of store all of this stuff, have it cataloged, and we will digitally photograph all of their stuff, digitally photograph their watches, have that stuff stored for them. And plus, there's also other incentives and opportunities that people are using the platform for as well, because it's based out of Delaware, which is a tax-free state.
Got it. That's wild. So maybe a little bit about the cost. So if someone has, let's say, a $20,000 watch they want to insure through Wax, how much does the insurance typically cost?
Yeah. So here is a little bit of an education for your listeners when it comes to insurance, because there's never a one size fits all. And here's the why, right? Because very often you'll hear people say, well, I don't get it. My insurance is so much cheaper than yours. And people forget this is an admitted product. And what I mean by admitted is that this is a product that is filed state by state, which means the rates are the rates based on the risk profile of where you live, right? So it's contingent entirely upon that, because the risk profile of somebody that lives in, let's just say in LA, in a high risk wildfire location is very different than somebody that lives in Connecticut, right? So those rates kind of vary accordingly, but I would say that the rates range somewhere between 0.3% of the value of the item, right? 0.3% to, several points, right? Is kind of the range. And then in between, it's like, that's where the magic is, right? Because some people coming in to protect just a single item, it's kind of a flat rate, but those that are coming in to protect a collection, once you hit a certain threshold, then we have the ability to offer discounts or credits is what we call them in the industry. And that's based on like Do you have a home safe? Do you have, are you in a location that's close to, fire hydrants and stuff like that? There's kind of like 2 or 3 questions that we ask that kind of would suggest that is a low risk location. And this individual is doing the right things to protect the things that they care about. And then those are the individuals that we could extend discounts and credit to as part of their collection and as it grows.
Got it. And Rich, when people say, hey, look, I got this really rare baseball card, or I have this like really old coin or something, right? I imagine that a lot of those types of products the value can change quite a bit based on dings, scratches, aging, etc. Do you go through an appraisal process for these types of products?
So here's what I would say. Our process starts first and foremost with where the individual feels the value of the item should be, right? We try to make this a collector-centric product, right? So if you as a collector think that your thing is worth, let's just say $10,000, okay? We have hundreds of thousands of data sets that we cross-reference on the back end to make sure that the price that you say it's within the range of reason, right? As long as it doesn't trip within that margin of error, then we're like, you know what? Great. Because that's part of our fraud mitigation as well. If somebody's trying to insure something at a value that is way higher than it actually is, that could be a red flag, that somebody might be a bad actor that's potentially coming in to try to do something not so great. And then there's individuals that might be coming in and trying to set it too low because they're hoping to save a little bit on the premium, and maybe that. And then, so we try to make sure it's right sized to the correct agreed value. Now, there's always instances where there are items that are truly unique. It could be one of one. It could be, a very limited edition collection or a piece that has very little market activity in the world, right? It could be just a couple sales out there. In those cases, we have the ability to go through a number of channel partners that we have that will do an on-site appraisal for us behind the scenes. The client never bears any of that cost. That's another thing that sets us apart. Very often, insurance carriers will force their customers to go get appraisals and pay the $100, $200 to get the thing appraised. We eat that cost. That's on us. We know what the object item is, what the value of the item is. We feel best positioned for it. And that's just kind of a way to incentivize the individuals to come into our ecosystem. And
I guess in this particular role, Rich, you come across all kinds of strange things that people collect. What are some of the wildest things you've seen people approach you with?
I wouldn't say that. I mean, they're just impressive, right? Some of the things that we have some of them are just so unique. I can't even say what they are because you'll know what it is because they are public. They're publicly known, and there's only one of them, right? But there's other things that are fairly incredible, like a game-worn jersey from Kobe Bryant's first game, right? Signed, and it was worn by him in that game, and we protect that. And I think that's great. I think that's fantastic. We have tons of wild things like that because the range of collector that we have, Gabe, it runs the gamut. Like we have people that are just starting their collections off where it could be collections that are, $10,000, $20,000 worth of stuff. And that includes jewelry as well, right? Like we do all that. Like we cover up to like 33 different collectible categories. It's watches, jewelry, trading cards, sports memorabilia, comic books, sneakers, like the whole 9 yards. But very often individuals will have jewelry, especially if they're married, like the significant other's engagement ring. That's something that we will often protect in addition to an individual's watch. But the range is wild, right? There could be some people with a couple $1,000 collection and then other people with literally a $7 to $10 million collection, right? That's just the range of the impressive clients that we have.
Rich, what is your outlook for the industry? I know that there's like some collectibles, for example, art, right? There's some websites on the internet that let people invest in collectible art, for example. And one of the things they always advertise is that they claim that art is kind of recession proof, right? what is your opinion on collectibles in general, and how do you think they fare compared to like stocks or real estate or other kinds of investments?
So here's what I would say about that. When starting Wax, you have to think about things in terms of the total addressable market. How big is this market? If you're going to create a company, there needs to be an understanding of how large it could potentially be and how big it could scale, right? So when you look at the total addressable market today in the collectible space, and that includes all the categories that we talked about, it's about 450 billion, right? We're talking globally. And then by 2000, I think the stat is like 2031, it'll be like somewhere 600 billion plus. So it's growing at an extraordinarily steady clip. But what I would say is that there's always some level of variability that happens. Those items that are truly collectible, I believe that the value always inherently goes up, especially over a long enough period of time. Unfortunately, some collectors don't understand that some of the things that they think is quote unquote collectible is not necessarily collectible. So you think Rolex, for instance, is an extraordinary brand and arguably the best, most powerful brand that you could think of, right? But their production volumes are significant. I mean, they're producing nearly 1 million watches a year. So that's not exactly rare. So if you're trying to tag scarcity to the value of an item, that might not be it. And then there was a period of time over maybe a year or so ago where Rolex watches, especially sports watches, which are extremely commonplace, were trading at absurd levels. So I have a Rolex Daytona that I managed to score at retail, and this was a number of years ago, and I got it for, I think at the time it was about 11,000, right? A lot of money, retail. Immediately at that time, it was the secondary market value was about 20,000. Like the day I walked out of the retailer, right? During the craze of this hype cycle of watches over the past year, that watch peaked out at nearly $60,000 in the secondary market, right? Now, it has since come down to reality, just like all markets have, right? So I'm talking public, private, you name it. And a lot of this is driven out of, you could say it's the rising interest rates, the kind of collapse of crypto. All that has kind of created an amalgamation of just kind of more of a right sizing of the market conditions. But these watches are still valued high. So that same watch is still trading in that $25,000, $30,000 range in the secondary market. Now that's extraordinary. Now you take the flip side of that and you go after a truly rare collectible piece where there's just a few of them, right? You go after a piece that is like I think of what's an example that I'll throw out here. It'll come to me, but there are one-of-one references, piece uniques, or even low production volume items, right? So MB&F, that independent that I was telling you about, they're only producing a couple, not even 100 pieces a year. So the price points on average are, I think the starting point is around 50,000 though, right? Now, like this is how they're making their money back. Those items, if they continue to build the community and the camaraderie behind it, that is a lot of the hype behind of what's fueling and propping these prices up. This is no different across collectibles in general. If you're trying to truly invest in the upper echelon collectibles that are out there, whether it's art, comic books, sneakers, there's always a market there, right? And the value of these things continue to grow at a steady clip. But just like anything, you have to balance the risk reward, and it's part of your portfolio. It can't just, if you're just investing in collectibles, not a smart move. Now, if it's a percentage of your portfolio that you're like, you know what, this is just going to be a nice hedge to some of the other investments I'm making, now we're talking. That is wise. Now you're thinking about, not only balancing your portfolio, but you also get, this is the beauty of this, Gabe, is that the reason the collectible space is also growing at such an accelerated clip is that it slants more youthful. So there's a younger generation of individuals that are getting into this, mainly because they get to appreciate and play and enjoy these things rather than just, seeing a number on an E-Trade account, right? It's a very different experience. Like if you get to actually wear a watch while you're out with friends and you're socializing, and you get to appreciate it, and it's appreciating in value as well, well, I could see why more people are drawn to it. And this is why we've kind of positioned ourselves the way that we have, because it has certainly had a nice pop during the pandemic and post-pandemic. Now it's kind of plateaued a bit. It's steadily increasing once again. But just like any other market, like I think we're at the early stages of what this market could potentially become.
I agree. Yeah, a good watch is typically a good conversation starter, right? And so I can definitely understand that it is something that is inherently more enjoyable than just owning a stock and then watching your E-Trade account once a week and seeing where it is. I will tell you a bit of a story about getting back to the economic side of things. I lived in China for a few years as an expat, and I was quite surprised that in China there is a big part of the population there in the cities who are becoming affluent, right? Mm-hmm. And it's counterintuitive, right? You would think that as the economy starts slowing down or if there's economic problems, you would think that people would start to, sell their valuables and hoard cash. But in China, they don't really have a lot of confidence in the central government. They don't have confidence in cash. And so they're trying to buy physical things that the government can't take away from them. So there's this culture in China of wealthy people, especially people who are in cash businesses, who are trying to buy things like rare bottles of wine, watches, gold bars, anything that's physical that they think they can hoard in their apartment that the government can't take away. And so there's a huge, that was one of the main reasons why there's a huge spike in demand in China for actual collectible items.
Yeah, 100%. And some of that, and I'll be honest, the APAC or Asia Pacific market in general is the fastest. It's the fastest growing, but I think it's still also the largest when it comes to luxury watches as well, right? So just keeping it specific to watches, it's where all the money is spent. And I think a lot of that has to do with the reasons that you precisely cited. And I think, a lack of trust, and the government is part of it. I think they have a bigger flex culture as well, right? I think there's a little bit of that where
that's true.
It's like, not only is this just a nicer way of kind of holding on to my investment, but like, I've already forgot what documentary I saw about, I forgot where it was. It was definitely in China. I forgot which province in China, but a lot of it had to do with not one-upping the individual next to you. It was to fit in with the individual next to you, right? So it's not that you're trying to make yourself seem like you're better than the next. It's more, hey, we're part of this tribe now. We both have this Audemars Piguet. We both have this Patek. This is great. Like, it's just like it ends up becoming another level of social currency.
Absolutely. And Rich, what are some of the mistakes you find first-time investors make?
First-time investors make.
Yeah, like specifically with the collectibles market. Maybe let's stick to watches. Let's keep it simple.
I would say this because I think it's applicable. I think the mistake that investors make, it's collectibles, it could be watches. I think it's in general as well. I think it's just a lack of education. If you don't understand what you're investing in, how you're going to be putting your money to work, you have to understand there are a lot of others that are out there that have been in this game for a while, and they understand what the market movers are. They understand that there are fluctuating periods of growth and stagnation. If you're going to start placing bets, make sure you do your homework, you do your research, so you're not flushing cash away. Now, what I would say is that if you're like me, even losing $1 will force you to reevaluate and understand where you made a mistake. So that could be a nice piece of education. If you're dropping a few $1,000s on an investment and it doesn't pan out or goes to zero or something goes down, chances are you're probably going to want to understand why. So I think more than anything else, it's getting yourself educated and informed before making a move, and then understanding there are levels to how you place your investment, right? There are more conservative investments that could be made with less risk. You need to understand the difference, right? The more you understand that, the more intelligent you could be with your capital and how it's actually expanded. For me, when I'm looking at, I don't play the investment game in watches. I don't. I think that kind of waters down why I got into it for the love of the game and the beauty of it. Like all of my watches, with the vast majority of them, tagged to a Y, right? Now, ironically enough, as I've been acquiring these watches over the years, many of them, their secondary market prices are way up. That was not intentional. That was not planned. Probably dumb luck, right? Because back in the day when I was buying these watches, like even my Audemars Piguet at the time, and I bought this watch to commemorate my son's birth. And I was like, I spent months like thinking about what would be the perfect watch for my kid 18 years from now, right? Because I'm thinking about handing it down to him one day, not, like, you can, do you like the watch? Like, no, you have to make some assumptions on which styles will still remain relevant a couple decades from now. That watch, when I bought it, was an obscene amount of money for me. I paid, it was about 18,000 and change, right? 18,000. And that was with, I think it was about a 22% discount, a discount you will never see today, but that's how the market was back then. And that watch now, at its peak, I told you that there was a peak period. I think that watch got up to about 60,000, right? 60 or 70. Now it's probably come down to a more reasonable 40, 50, but I'm still very much on the plus side of that. But that's just the thing. I didn't buy it as an investment. So those are unrealized gains that I'll never see, because those are things that this is for my son, right? So I guess that's just the way I would look at it is be thoughtful with how you're allocating your money, get yourself as educated as you can. But then once you've done the work, you then need to stay committed. That would be the next part of it, is to stay committed to the risk that you're taking. And make no mistake, there is inherent risk in every investment that you make. So you need to understand, is this money that I could lose, or is this money that I won't be able to eat if I lose this money, right? Those are very different things, and make sure that you're planning accordingly.
And I think that's good advice for any kind of investment, right? That's good generic advice.
Yeah.
And so, Rich, where can people reach out, or where can people find more information on collectibles in general, watches in general? How can people get connected to the community?
It's a good question. There are no shortage of special interest groups out there for every collectible category you're interested in. Chances are, if you're digging into watches, you're following all of the most popular watch blogs out there. So the Hodinkis of the world, Watchanista, there's just so many of them, right? And there's tons of YouTube content. One of our channel partners is Luxury Bazaar. They're one of the top secondary market dealers in the industry. They have a fantastic YouTube channel. It's just a great example to get yourself educated and informed on the different pieces that are coming out. But there are other special interest groups that are not tied to the commercial, right? So there is a group called Red Bar, and it's a global organization, and it's geared towards watch collectors. I think they have like 130 chapters worldwide. So you basically reach out to Red Bar and you tell them you live in this city. Is there a local chapter that I can get involved in? Before you know it, you get added to distribution lists. That's kind of how I started, where I just started going to random meetups through the Red Bar community. And then I started getting invited to other meetups. And before you know it, I was having meetups with people all over the world. I mean, like Switzerland, Dubai. I was coming through and I'm like, hey, anybody in Dubai want to do a watch meetup? Dubai Watch Club reached out to me. Before you know it, I'm hanging out with, a dozen folks that are bringing their collections and taking me out to dinner, treating you like family before I've even met them. And that's kind of like the beauty of the community. I'd say all communities are slightly different. Like when you look at the collector car community, there's no shortage of events that happen. Like there's caffeine and I think it's like caffeine and carburetors, coffee and carburetors, where they'll have these events where they're basically car shows. And then there's just like social meetups. There's no shortage of these things out there. Where you have your passion, which category you're into, just 5 minutes of Googling, you're going to know where all the special interest groups are. You just need to take the step of putting yourself out there and connecting the dots.
And Rich, I love your story, right? It sounds like you picked up a hobby in your teens, and next thing you know, you're traveling the world. Next thing you know, you're building equity, and now you have a job where you can do this full time. And so congratulations to you. I think that's a really cool story.
Thanks, man. It's pretty bizarre. Although I will say that even in my early years of consulting, I always knew that the community was so strong and it's just so unique and interesting that it would eventually lead to something. I just didn't know what. I thought it might lead to a client introduction or an opportunity like that would land a deal somewhere. Never did I think that it would be me, taking a shot at a venture-backed startup to see if we could grow something special.
It's very cool. Rich, where can people reach out to you to learn more about Wax and to learn more about you?
Well, if you want to learn about Wax, just go to wax.insure. All of our services are listed out there. If you want to hit me up on LinkedIn, just search Richard Vinhais. Happy to connect at any point.
Awesome. Rich Vinhais from Wax, thank you very much for your time. It was a fun conversation, Rich, and I wish you and Wax the best of luck.
Appreciate it, buddy. Cheers, Gabe.
Thanks.